We're live. Hello, everybody, and welcome to another This Week in Real Estate episode hosted by yours truly. My name's Ray. I'm a real estate agent. And we were just talking about, I went live a little bit earlier so some of you could hear the end of the new countdown music that StreamYard has. And it sounds a little bit like Sting. if you think Sting. But welcome, everyone. This is episode 309, broadcast live March 19th, 2025. And we've got a ton of news to talk about today, mostly in the industry. And then we also have some economic stuff to talk about. And the Fed is going to leave rates the same, drop rates, or the rates are going to go up at the end of the show today. So I would love to know your opinion. Go ahead and drop it in the comments. Are rates going up or rates going down? And that's right. You can make a comment on the show. This is broadcast live, even though it's also a podcast. Shout out to all the podcast listeners. We have way more podcast listeners than anything else, so I appreciate you guys. But wow, Christina M. Smallhorn, shout out. She said you're late. I like the new headshot, Christina. Looks good. Matt LaMarche is here. Olivier is here. He said Zillow has 9 lives like a cat. Yep, they're getting sued again. We'll talk about that. But if you comment, I can display your comment and I can talk about you. Or I can just talk about your comment. Cindy's checking in from Utah. She says, hey, Ray, what's up? And Jack Adridge says rates will stay the same. Okay. Elizabeth likes the groovy music. Christina also says rates will remain the same. Elizabeth said rates will go down a smidge. Is that because they're lowering their expectations? Or is that just because they're going down? Christina said, AI made my headshot. Really? That's a pretty good one. It's way more accurate than most AI headshots. Well, if you're also on Twitch, I can display your comment all the way from Twitch, even on LinkedIn or Facebook. If you comment on any of those platforms, I can display your comment. And if you comment on Instagram, just like Realtor Kimberly Mann, Realtor_Kimberly_Mann is, I can just read out your username because I have no way to display it from Instagram. But she said, that's why I'm here. That's what I'm here for, the Zillow talk. Well, we'll get into it then. I'm also messing with some new layouts. We'll have a couple of new graphics appearing. There may be some new sounds coming. So we're improving the show. That's good because that means we won't go anywhere. That Realtor Rob. Hi. He's over on Instagram. Thanks for checking us out there. All right. Let's get into the headlines. They've just run my career. Ousted Vegas Realtors CEO speaks. Y'all remember this story where there was a Realtor org CEO in Vegas, and it was weird. And we covered the story when it originally came out, but they basically, some of the group was like leaking information and they just basically got rid of her. So former Las Vegas Realtors CEO Wendy, I'm gonna butcher this, DiVicchio, claims her suspension and subsequent probe into last year's Realtor elections lacked transparency after she sued and received a death threat. This is crazy, people. In an exclusive interview with Inman, she said she received a death threat shortly after she sued the organization that employed her for 25 years. She said she has yet to receive an explanation for why she was abruptly suspended and eventually fired. Meanwhile, she said that she complied with the investigation while the colleagues leaked misleading details to the media throughout 2024. So she's going to get some payback. They've ruined my career, she said in her first interview since she was abruptly suspended last August. The complaint made reference to a disagreement she had with other members of the 15,000 member organization over the ownership structure of the Greater Las Vegas Realtors MLS. It's also shed light into disputes with members of the board of directors, some of whom resigned in the midst of the investigation. A candidate who ran for vice president during the election said in an email obtained by the Las Vegas Review-Journal in November that DiVicchio told her to, quote, keep campaigning, which she said appeared to show DiVicchio knew that she was behind in the polls. I don't know. It's strange. There's a transcript of the whole interview. A couple of notable quotes. She said, I was never allowed to read the report that they did for the investigation. I was not offered a copy. I was not offered a reason that investigation came up with for me to be let go. And if you remember, I'm trying to remember. Oh man, pop up. I'm trying to remember exactly what happened because there's been so many lawsuits and so much stuff going on with realtor boards around the country. But if I remember right, like she took some time off for a health reason and then came back or something like that, and someone said, "Well, we want someone to be healthy as the as the president," and then that guy winds up leaving. I don't know, it's all strange. If I'm remembering the right situation, which I think yeah. She said, I never had any issues when I was in the MLS. They didn't call me for a meeting. They didn't sit me down and say this was going to happen. I opened up my email, an association email, and there was a letter there that said, you are now suspended for 30 days as we do an investigation on tampering of the election results. What? They've not given me any transparency. I was told I was only supposed to be suspended for 30 days, and then they shut off all my services. And then the next thing you know, I get another letter in the mail saying the investigation is still ongoing with further notice. Then you're not to talk to any members of staff or anybody affiliated with the association, nothing further until notice. The next notice I received is that I was fired. Wild. What is going on? If you're a realtor in Vegas, what do you know? Go find a burner account and comment. Or you can just send me a DM. I get a lot of tips in the DMs, and that's fine. I won't use your name unless you tell me it's okay. But something odd is going, and this was right around the time where MLSs were debating and arguing things like clear cooperation and if they should be split apart from the board, from the local NAR boards and things like that. All right. So there's your update. We covered that story, back in August. I just wanted to update you on that. So there's some even bigger news out last week. But wait, I have an update on this as well. Compass negotiating to buy Berkshire Hathaway HomeServices. The deal is reported nearing the finish line, though the companies have not agreed to final terms. This was by Taylor Anderson and Jim Dalrymple II. I'm not going to spend too much on this, but rumors of the deal spread rapidly this week as multiple sources telling Inman it was imminent. Inman staffers spent much of Wednesday and Thursday reaching out to various individuals who privately discussed the deal, but declined to go on record. So you have multiple sources discussing a deal that everyone knew was happening, but they did not want to go on record. The Wall Street Journal first reported the deal publicly. According to the report, which cited anonymous sources, the deal is set to close soon, though a final price has not been agreed upon. Inman reached out to Compass and BHHS. Nobody said nothing. All right. and then it kind of gives you a history into their strategies. But wait, there's more. Today, is this today? Wait, hang on. March 14th. So not today. So everyone who covered that story last week when it broke, I guess that's kind of a benefit to only having a weekly show that appears on Wednesday, because you get to see stuff like this. Berkshire Hathaway HomeServices CEO denies Compass negotiations. What? So which is it? Is Compass going to buy them or not? In the wake of reports of Compass in the process of buying Berkshire Hathaway HomeServices, the Home Services of America CEO Gino Blafari on Thursday claimed no such deal is in the works. He said a statement internally to franchises Thursday evening, claiming, quote, there are no discussions, negotiations, or agreement to sell Home Services or any of its affiliated companies, and that includes Berkshire Hathaway HomeServices franchise business. Moreover, no such sale is being contemplated. So in other words, we're not talking to anyone, and also we're not even thinking about it. We're not talking to anyone, and we're not even thinking about it. Blafari's message opened by referencing articles published in the Wall Street Journal. Those articles, which include an Inman piece, stated the Compass was in the process of acquiring Home Services, has not given notice of the article nor the opportunity to respond. Inman's reached out to the Wall Street Journal asking if the outlet did seek comment. So this is a tactic or strategy often used by journalists that have some kind of breaking news that they will reach out at 10 p.m. and say, hey, we're going to run this story at 12 noon tomorrow. Would you like to comment? And then they say, well, they were not available for comment, or we reached out and they were not immediately available for comment. I would suspect, that's what, for those of you watching the Blake Lively and Justin situation, that's what they did to him. So I would assume a real estate outlet is not really out for the gotcha headline. It is not going to, surely they would be more focused on maybe accuracy. I would assume maybe this is the wrong assumption. Maybe, maybe the gotcha headlines are in the Wall Street Journal for this company's going to buy this company, but that's a pretty big miss. If you're a journalist and you say, hey, we have all these juicy details, this is going to happen, and then it just doesn't happen and it's not even close to happening, that's a pretty huge miss. Gigantic miss. Inman also reached out Thursday night to the email addresses included in Bufari's message to franchisees. In addition to Inman, Stephen Swapple, founder and chairman of consulting firm T360, which owns Real Estate News, wrote on Facebook Thursday that he had reached out multiple times this week, never got a response. Friday evening, the company finally provided Inman with an emailed statement attributed to Chris Kelly, executive vice president of HomeServices of America. There, quote, there is no pending or contemplated transaction or sale between HomeServices of America and Compass or any other party. Quote, we are fully committed to our company's agents. We are fully committed to our companies, agents, employees, and mortgage, title, and insurance professionals, helping them to empower the incredible work they do for buyers, sellers, and their communities. Well, you can still be committed to that and also want to sell. I guess they're just using that as a moment to put out some corporate fluff. Matt Lamarche says, or someone just loves to be in the news.
Yeah, bro can't stay out of the journalism problem. That's his problem.
You mean Refkin, or are you talking about
Yeah, Refkin.
Yeah,
Refkin. I don't feel like Warren Buffett's like a press hog.
Wouldn't that be an interesting situation where Compass leaks it in order to give them maybe more validity for another acquisition or for something else, some other move that they're making?
Exactly.
I could see that being some kind of strategy. Maybe
some stock pricing changes.
Maybe they needed it. I wonder who sold. Who sold at the
maybe
same
Warren
time
Buffett has a massive. Warren Buffett might have massive investment into Compass as well, for all we know.
Wouldn't that be interesting? Isn't he cashing out? No, the cash out, I guess, was to sell this company. That's not happening. Okay. This says this situation has further been complicated by the fact that Compass has refused to speak publicly about it. The situation didn't respond to Inman's request for comment Thursday and Friday. So, call me crazy, but if a lot of people are talking about something and you reach out to the parties that are supposed to be involved and they're not commenting on it, it does sound like there's a story there. So I don't really blame the news, but you do have to give them quite a bit of time. And maybe send them the article and say, hey, we're going to publish this article. Would you like to add comment? But it's weird that someone has to comment and say, no, that didn't happen. A situation, given the lack of public comment in the immediate wake of the stories, speculation continued mounting. Everybody was talking about it. That's basically what it's talking about. Even their franchisors were talking about it. Okay, so that's not happening. But it does appear that there are more M&A deals imminent this year, which we talked a little bit about last week when KW sold out. Well, here's one. Normally I don't cover these types of stories, but I thought this was a really good roundup on Inman. It says billion-dollar mergers, upheaval, and real estate reckoning. The subtitle is billion-dollar deals aren't just making headlines, they're reshaping the industry. Consultant Chris Pullinger writes. the subsequent impact will be felt by every brokerage and home buyer. What is the impact on home buyers? And I thought this was a pretty good take. The real estate industry is in the midst of a transformation unlike anything we've seen before. $1.7 billion trends acquisition there, $5 billion mega merger, which doesn't sound like it's going to happen. For far too long, real estate's been too comfortable. That's what everyone says. This is not a disruption, but maybe it is. All right, I want to go back down. The big deals reshaping real estate. Keller Williams to the private equity. We talked about that last week. Redfin, Rocket, and Integrated Dream. This is the $1.75 billion deal where Redfin is, I guess Rocket is buying Redfin. Red Rocket. No. If executed well, this could be a massive win, but if history has taught us anything, integrations on this scale don't come without massive challenges. 3, the Compass Home Service. Okay, we can cross that one off the list. That's not happening, apparently. So then it does ask the question, what's really happening? A super cycle of divergence. The biggest misconception right now is that these national level deals are separate from what's happening at the agent level, and they're not. They're direct reflection. The real estate industry is in a super cycle of divergence. Those who are producing are gaining more market share, and those who aren't are getting left behind. The middle is evaporating at an accelerated rate. Are you guys seeing this? Is it the story of the haves and have-nots, to where you see a lot of the business going to those who have a lot of the business and those who have a little business getting much less? What are y'all seeing in the market? Because in our market, I think that would be true. I think you are seeing people with big businesses grow bigger, and it's becoming more difficult for people to enter the industry. That's for sure, or to survive the industry once they enter. I see the comments over on Clubhouse, but I want you to know I cannot look at all those comments. So apologies. I can't bring that up anywhere, and I can't reference them.
Yeah.
I think there's a lot of that's a deep question, Ray. I mean, it is. I mean, so it used to be back in the olden days. The bigger companies, when the market would show some stresses, would be run by the boardroom, and they'd sort of back off. And the small indie guys would go out and buy up other smaller indie guys and win at the end of the day. And you saw a lot of big companies try to get into the real estate market, like Prudential, like Merrill Lynch, like GMAC, who all failed because of a more boardroom mentality. But this time definitely feels different. And who knows what the combining of industries with Red Rocket will do. But back to your question,
such an unfortunate name.
Red Rocket. It's like Red Lobster, right? Or not. But back to your question. So what I'm seeing is we're still starving for inventory. The more experienced agents are getting that inventory. Compass is making a play to get more inventory with the private exclusives that they're and then CCP comes into this whole mess, which most people don't understand. So what I'm seeing is, as an experienced agent in the market with market share, I'm getting most of the listings right now in our town. Yeah. And I have to think that is true in a lot of markets, and especially if sellers are looking for either a referral from a friend or somebody with a track record. There are a lot of agents that have just gotten into the business over the last 5 years that just don't have that depth in the referral pond. So
yeah,
nothing, nothing firm, but I think you're right.
That's what this this article says too. The same consolidation trend is happening at the micro level. Teams and mega agents are growing at a rapid pace, absorbing the business from agents who can't keep up. Top producers in every market are widening the gap between themselves and the bottom 90%. The days of coasting by on referrals and part-time effort is over, which is exactly what you said, Jack. Couple of comments.
And I'll bring it up again. CCP is a problem, and CCP is
Communist Party.
Yeah, it's a problem because we took a huge step forward with the NAR settlement for the consumer, with transparency, I guess, and representation, and now all of a sudden we're going back to the old cannibalistic ways of hoarding inventory in-house, which goes against that. But CCP, that so many people are trying to get rid of to promote that, actually promotes it more if it's in play.
Yeah.
I mean, I think CCP needs to. So if we're looking, and I hope it's okay to digress a little bit.
Yeah, that's fine.
If we look at the whole market and private exclusives work for like 1% of the buyers, you almost have to treat it like I would think that you almost have to treat it like a bit of a standardized process where there's a standard to meet if you are signing up a listing that does not go into the multiple listing service and use the open market theory that has worked so well for so many years. And it's almost like when you go to get a reverse mortgage, you need to go through counseling. There needs to be some standardized process that sellers acknowledge before they take that leap, because I think it's even less than 1% of the market that type of a system actually works for. And Refkin is trying to talk out of both sides of his mouth by saying that it's CCP that is not allowing him to share his listings with us. And I'm having a bit of a debate with him on LinkedIn right now, and that and that he'd like to cooperate, and they cooperate with everybody. Well, I'd like to see if that was modified, if he would still be singing that song, because it really feels like a commercial play in a business where we need to look out for fair housing. We need to look out for our buyer clients, and I'll leave it at that.
The rule as it is written today allows Compass to take in listings and sell to all Compass agents and Compass clients. So,
but not put those, he's restricted from putting those listings on a public portal.
Correct.
That would allow agents and buyers,
Correct.
Agents and buyers access to it.
That's what he's saying, that he wants to get rid of the clear cooperation policy, the CCP, because then he could put it on his own stuff, give everyone access to it. We can still show it.
But will he really?
Well, that's what they're saying. Right now they can't.
Yeah.
So we'll see. They can do the practice that, a lot of them are saying, well, we want to be able to have in-house listings. Well, they can do that right now with clear cooperation. That's not a thing.
That's right.
Let me get to a couple of comments on the YouTubes. Elizabeth Nightingale says, I'm seeing even top agents suffering. That's interesting. Olivier said, agents want to pay less, so it makes smaller brokerage model hard. He does get into that in this article, Olivier. Let me scroll down a little bit. Who wins, who loses, and who's watching closely? The winners, consumers, is what he speculates here. He said, if done right, consolidation could bring more seamless, efficient experience for buyers and sellers. From Keller Williams tech enhancements to Rocket Redfin's integration, consumers might finally see the more transparent and frictionless transaction they've been demanding. These moves will force the rest of the industry to up their game. Who wrote this article? I'm laughing because the last tech advancements that KW made did not go over well. So that's why I'm kind of Chris Pollinger, founder of RE Luxley. Oh, okay. All right. I'll keep going. Sorry. I didn't mean to cackle. Top agents and teams, the best in the business will continue to get stronger. Those who operate like a business rather than hobbies will continue to absorb market share. Okay. The losers, and this is, Olivier, where it gets to your comment, the smaller traditional brokers, Small and mid-sized players will feel the squeeze, with big brands increasing their marketing firepower and operational efficiency. Small players will need clear and compelling value proposition to compete. This is, I think this is key. What I used to own my own brokerage, and so I am familiar with the squeeze, and I know what's happening, and I could see the writing on the wall that bigger brokerages are able to do more and to do more for their agents because they are taking in more dollars and then spreading it wider. And basically the companies are trying to make less money. I had to make a certain amount of money because I had to live. But, we see all these companies all the time in negative numbers. Like, how do they do that? Well, they're doing it. And so that's, it's a different model, and a small traditional brokerage that has to pay for their stuff and be profitable in order to survive can't compete with that. Agents who refuse to evolve, it's another loser. The industry is no longer tolerating mediocrity. The agents who don't adapt, those who rely on outdated tactics or refuse to upskill, will find themselves on the outside looking in. I 100% agree with this. Matt LaMarche said in Atlanta, Hot Atlanta, we only had 1,300 top producers in Hot Atlanta last year. Matt likes it when I call it Hot Atlanta. That's what he calls it.
The worst. Call it ATL2 and I'll leave this immediately.
ATL.
Oh my gosh. No, so just for a little context, top producer in Atlanta means $4 million or more or 15 transactions or more. And so, I'm not so sure the top 10, 15% is actually the top, but I've been trying to change that for a couple of years actually now. But regardless, it wasn't a huge change actually from last year, but from 2023 to 2024. But what was the amount of transactions and the number, the volume number. Like if you look across the top 10 of 23 to 24, their businesses were down 30 and 40% in most cases. And so while I agree with this like general sentiment of the top producers and the teams are going to do more and better and faster and whatever else, and they probably won't feel that squeeze as much. We also absorbed a ton of people into our MLS and into our association from smaller associations because those guys are really, really getting squeezed right now. And people still want the value of events and RPAC and everything else at the local level. So we haven't really seen a fall off like a lot of people predicted. I think this year is going to be different, though. I think we are going to see a more substantial fall off because the number of transactions don't seem to be clipping along at even what they were last year, this time last year. So
the sales numbers or the membership numbers?
The volume numbers so far, like the number of sales.
Yeah, I think we're also going to see a huge dip in the membership numbers too. Now that a lot of people, they had to renew by February, and we haven't seen the membership reports since then. So
well, and I agree. I just saw Christina's.
Christina Smallhorn on YouTube says, but I've seen those IG posts saying, quote, top producer, unquote.
Yeah. First of all, if you say you're a top producer, I don't think you are.
If you have to say it.
Even if it is, but exactly. But if it's in your Instagram profile, why? Stop that. Like you're picking up valuable characters with top producer, something that means nothing to a potential referral partner like me. It just means you get blocked or deleted or...
So Elizabeth in her market said, I know single agents that sold 100 plus homes year after year, struggling to close 30 over the last year.
Yeah.
Elizabeth, are they older and outdated? Or are they, why are they struggling to close 30? Are their sales just down, but maybe they're nearing retirement and they're like, meh, I don't care anymore. 30's fine. What's the reason, do you think, that for the decrease? Inventory, competition. She's on Clubhouse, but she's going to type it. Okay. She also said, I'm seeing pretty good inventory levels now. At all levels, agents are struggling. Even the top producers are struggling a bit. A tiny handful of agents are still doing okay. Very interesting. In our market, kind of the top agents are doing pretty well. Otherwise, it's there's a lot of commission breath out there. So it's not great for the consumer currently. All right, regulatory watchdogs. With all this consideration comes increased. With all this consolidation comes increased scrutiny. The industry already is dealing with class action lawsuits over commissions, antitrust concerns, and ongoing regulatory pressures. If the major players don't self-regulate and raise the bar, Washington will do it for them. Dun dun. The real estate future crystal ball with cracks. The upside is smarter, more efficient industry. Picture this: a buyer logs onto an app, speaks a few preferences, modern home, ocean view, under $5 million. Within seconds, AI-driven platform scans millions of data points, serve the perfect match. I mean, yeah, that's yes, this does sound good. Elizabeth, you unmuted. Look at that.
I do, but I have a terrible voice because of allergies, so forgive me. But
that's okay.
No, I'm actually seeing like super techy, super innovative, extraordinary human agents really struggling, and it's across the board. And although they can feed their families with 30 good sales, of course they can, but it's such a change from 100 sales a year.
Do you think it's so? Is it the local market for you, or do you think there's just been a shift to some kind of budget model?
I think that new home construction in our area is eating a lot of agents' lunches. And to be honest with you, those new home construction areas are not in what I would call the most desirable areas. They're in the far out fringes. But it's taking a lot of the sales, with or without an agent. A lot of times without an agent, of course. But I think that's a big chunk of it. And so the most favored areas are seeing fewer turnovers, and I've seen sales way down like 30% in some areas.
Interesting.
And some of that could have to do with the new expenses of extra coastal insurances. I'm still kind of waiting to get my head around all of that.
That is true. So it could be very market dependent, but we'll wait and see kind of what happens throughout the rest of the year. We have some stories coming up about inventory shortly. I don't think it's this future. I don't think this is taken shape yet to have any impact on the agents as he's talking about, where somebody could just log into an app, speak a few preferences, get financing, streamline their negotiations, and then do a frictionless closing experience. This is what everyone is going for, but just the reality of this is so far away. I mean, it's likely not in my lifetime, even though in my lifetime we've had cell phones and internet. That's weird. That makes me feel very old. But even though those things have happened in my lifetime, the fact that somebody can or would be willing to trust to purchase this large with just an app is kind of wild. So I think agents will still be used in that. However, the downside, he said, with all this consolidation is the over consolidation. Whenever you just have big mega corporations controlling the market, competition shrinks, innovation slows, consumers ultimately pay. Fewer choices means buyers and sellers could find themselves stuck with cookie cutter solutions, stripped of personalized service and real options. Yeah, I would agree with that. Wild cards, unforeseen forces that could flip the game. Think M&A boom is the biggest force shaping real estate. Think again, the real disruptors are the ones that are lurking just beyond the headlines: interest rates, elections, sweeping regulatory changes. They don't care how big your brokerage is. So then it goes into each one of these that we've talked about at length. What agents can control: raise the bar, double down on skills, work harder. Like my shirt says, and smarter. So that's it. It was a pretty good article. Chris Pollinger over on Inman. I thought he brought up some really valid points, some good points, but I also think he speaks of a future that is so far away that there's plenty of time for agents to react. And I don't think that's the reason why so many people are consolidating now. I just think people want real estate agents included with all the commission compression going on. There's just a large number of people that won't put up with it at a lower price, that they're going to say, it's not worth it. It's not worth my time. It's not worth me doing that job. And I'm just going to join a team or something like that and let other people in a more efficient way take those jobs off my plate. They have staff, and let me just do the thing that I like to do, which is showing houses or listing videos, whatever it is. So I think either people are going to surround themselves with assistants and they won't look like a team, but they will be a team because they'll have all the assistants helping them out, or they're going to join a team that already has those processes and systems in place. I think boutique brokerages are going to do the same with national companies. So a company like Slide, Real Brokerage, anyone that has the private label, I think they're in position to do very well in helping the indie brokerages take off a lot of the overhead and advance in tech in a way that they can't alone. So we'll see what happens. Okay. Hang on, please. One moment, please. That's on hold. One moment, please. I don't know what company does it, but that's on hold. Olivier says Top Producer Magazine. That is a magazine, isn't it? It's something like that.
Real Producers?
Oh, Real Producers. That's what it is. All right, here we go. Zillow back in the news. They're getting sued again. But they're getting sued by the same company that sued them before, Rex. So Rex seeks full appeals court review. The discount brokerage contends that 3-judge panel erred in finding the NAR's no commingling rule was not direct evidence of concerted action between NAR and Zillow. So basically, they're fighting the appeals. Rex wants to take its case against Zillow and the National Association of Realtors to all the judges of the Ninth Circuit Court of Appeals. On Monday, March 17th, the discount brokerage petitioned for a rehearing on en banc. You like that, Olivier? Meaning before all judges of the appeals court, not just the 3-judge panel. In affirming the district court's decision of upholding NAR and Zillow's conduct with its memorandum opinion, the panel gave back of the hand dismissal. Not only, that sounds terrible, not only to Rex and the U.S. Department of Justice, but also to the millions of consumers saddled with the payment of inflated commission rates, attorneys for Rex wrote in the filing. All right, so to catch everyone up to speed here, Rex said, hey guys, you don't have to use a pesky real estate agent to sell your home. Use us. It's super discounted and you'll get all the same exposure because we can also list your property on Zillow. So people hired Rex and Rex did this. Zillow then becomes a brokerage. And we have a rule at the NAR that if you have listings on your website, you can't just intermingle your MLS listings with other stuff, with other listings. You can put them on there, but they can't be on the same search. You have to define that these came from the MLS and these are from somewhere else. So Zillow introduces a tab, the infamous for sale by owner tab. So now people would go to Zillow and there would be a regular search of all the properties that are through agents. And then there's another tab that had a search of those that were just for sale by owner. Some argue that this gave for sale by owners way more exposure because it basically pulled them out of the thousands and thousands and thousands of property listed by agents and showcased just those 50 or 60 homes in that same market that were listed for sale by owner. Others said that the use of the tab is what sent Rex's business down the toilet because they could no longer provide the exposure. So Rex, a company independent of Zillow, built their business model on Zillow's website. It just sounds ridiculous. Built their business model on Zillow's website. Zillow's website changes and their business tumbles. So then they sue, saying this is anti-competitive, antitrust, whatever, commingling, all that jazz. They were ruled against in court and then on appeal. And now they want another appeal to all the judges of the Ninth Circuit Court. So this commingling rule, I can't remember the exact name. Anyway, they said it furthered NAR and Zillow's entrenched dominance of the residential real estate services industry and also sanctioned a district court decision that provides a blueprint for and incentivizes trade associations like NAR to circumvent the antitrust law by promulgating anti-competitive rules and labeling them as optional and deploying them through proxies. Oh yeah, that was the other thing. This rule was supposedly optional. When I asked if I could put other listings on my website, I was told no. And I don't know if the time it was the brokerage I was with or the MLS rule or what, but the answer was no. And it was not optional to me. Anyway, the filing pushed back against the panel's March 3rd decision to affirm the lower court ruling that threw out Rex's antitrust claim, and NAR and Zillow denied the now defunct real estate brokerage new trial against Zillow. What's another update here? According to Rex's latest filing, however, the panel's conclusion that the rule was evidence of concerted action was flat wrong because it conflicts with the previous precedents from the U.S. Supreme Court and Ninth Circuit Court. Instead of recognizing the rule for what it is, the end result of a concerted action by NAR's members, the panel treated NAR as if they were a single entity apart from its members, which could not conspire with itself, requiring Rex to prove an agreement between NAR and Zillow from scratch. That's interesting. So the panel treated NAR like an individual, saying, well, how can you conspire with yourself? If Zillow is in the NAR, then Zillow is part of NAR, and NAR can't conspire with NAR because it is one entity. Wow. I don't think I've ever thought about looking at it like that, but apparently that's how the panel ruled. As the DOJ explained in its amicus brief and oral argument, the rule is a standing invitation to NAR members to ratify, adopt, or enforce the rule. All right, so we'll see what happens with Zillow, but back in the news, getting sued again. I feel for him a little bit, but ever since Greg left, that company has changed completely. So I don't really feel for him that much. All right, we have another court case to talk about. Wait, let me check here. All right, just checking the comments. DOJ raises concerns with the Nosalek settlement in the latest court filing. A supplemental statement of interest filed on Monday by the U.S. Department of Justice argued that the settlement only offers cosmetic changes to MLS PIN's agent compensation rules. The U.S. Department of Justice remains unsatisfied with the proposed settlement in the commission class action lawsuit known as Nosalek, according to the statement of interest filed by the department on Monday. Home sellers filed a lawsuit against MLS PIN and several other major real estate companies in 2020 for allegedly requiring sellers brokers to offer compensation to buyer brokers. It's the same stuff we've been talking about. MLS PIN attempted to settle for $3 million and agreed to to rule changes over the buyer broker agreements, but later its damages were raised to $3.95 million. The parties involved agreed to a general proposal that would no longer require sellers to offer compensation to buyer brokers. The proposed settlement perpetuates the very same competitive concerns that trouble the current rule. What? Supplemental statement of interest filed by the DOJ Monday argued that the current proposed settlement would only make cosmetic changes to the MLS PIN's rules, neither protect nor restore competition to the important market, but rather encourage steering of buyers away from listings with lower commission offers. This is what I was saying, that just like realtors can't have this both ways, neither can the plaintiffs. Realtors can't have it both ways, and plaintiffs can't have it both ways either. Let me see if I can explain. A real estate agent says, Mr. Seller, this is what I charge. This is what they would say. Actually, let me go back. This is what they used to say. This is what I charge, and then I'm going to split that with the buyer agent. And if a seller's like, well, I just want to pay you, I don't want to pay that other buyer agent, the agent would say, well, you can do that, but if you did that, then you may not get very many showings because, if I don't incentivize you to sell something, then why would you sell it? So by splitting the commission with the buyer agent, it incentivizes them to come and sell this property. And if you can either add more, add less, whatever you want to do there. But this is an issue. All right. If that is true, then that means that on the buyer side, an agent is looking at this property and saying, I'd love to show this, but they're not paying me, so I'm not going to show it. And now the buyer agent is steering his clients or her clients to the properties that pay him or pay him the most. NAR says, no, you can't do that. You can't steer your clients to properties that pay you the most or not. So now on the listing side of this conversation, that argument should not exist in a make-believe world where all of the agents are not working for money. You can't have this both ways. Okay. If that's the case, then a home buyer or home seller also can't have this both ways. In the same argument, a home buyer can't say, hey, I want to have an agreement with you so that you know what I pay you, and I want you to show me everything. But if there's a property that says they're not going to pay your fee, I'm not interested. Okay, that's fine. So now you have situations where agents are calling properties saying, hey, are you going to pay the fee? And if the person is not going to pay the fee, the agent says, well, I can't show it to you because my client's like, I don't want to see that property if they're not going to pay the fee. Now, as a practice, this is terrible. Just so you know, as a practice, that's a bad practice. That's not a best practice. And as a matter of fact, there have been several cases, and I've said this on the show before, in which sellers and agents have said we're not paying a buyer agent compensation, but we send our offer and it includes that compensation. They wind up paying it and we close the deal, while all the other agents that didn't show this property missed out on behalf of their client. Okay, we've said that before. So we know that this is a bad practice. So now you're in a situation where the seller essentially can say, well, how much money do I want to put out there? Do I announce that I'm putting money out there? Do I just want them to stick it in the offer? This is why the DOJ is saying that the rule change that happened of just saying that it's not public now perpetuates agents calling and saying, well, how much are you going to pay? Because the buyer wants to know. It's just, you can't have it both ways. And there's always going to be situations like we've had buyer clients say, this is what I'm going to pay you. I don't care what they do. Okay, great. And we can get them a deal in a house. They wind up paying less for the home. There's less up in their mortgage and they come out of pocket to pay us. That's fine. But for the vast majority of buyers, they're going to want to go see properties in which the buyer agent compensation is paid if they have hired an agent. Okay. Now you've set up the situation officially in which a agent is going to call and ask, how much are you paying me on behalf of the buyer? It's an official setup because there's no announcement of compensation. So it's wild to me that they went, okay, you have to put compensation on out publicly. If you offer it, you got to put it out there publicly. And what they were thinking is that would lower how much real estate agents are getting paid. And it did not. Now they're saying, okay, well, don't put it out there publicly, thinking that that's going to lower what real estate agents are getting paid. And it has not. So this is all convoluted. And DOJ, because of their stance on this, and I don't know if it's because of the political leaning going back and forth or what, but because of how they've dealt with this, they've stepped in it and they've created a huge problem in the real estate industry. I think the smart thing to do for most agents, and again, I've said it on the show before, I just want to put it out there for new listeners or people that have not heard me say it before. The smart thing to do is just to require agents to put it in the offer. Have a blanket, no one offers anything, and you just put it in the offer what your buyer fee is if the buyer chooses to request that fee be paid by the seller. Period.
And don't ask to be from the start.
Yeah, you can't.
Don't ask the question. And if somebody asks me that question, I'm pretty unique in my market. I say that the seller is willing to consider all offers, including those with compensation.
Yep, yeah, that's pretty much it.
Period. But don't ask me.
Yeah, we say if the buyer would like for the buyer agent compensation to be paid, be sure to include it in your offer.
And the arguments that I'm hearing from other agents for not saying that my seller will pay X out to a buyer agent are trying to protect the buyer agent instead of the consumer. And It's frustrating to me.
Right. Well, and a lot of them don't even have agreements. I mean, that's the truth of it. A lot of them have never had agreements with their buyer and don't have agreements with their buyer now. What's up, Miss Ginger Walker? How are you? Come on up, Ginger. I don't see you up there, but I think yeah, there you are. What's up? You're still muted. Oh, she's down now. Okay, never mind. Maybe she'll rejoin. Are you there?
Can you hear me or
I
no?
can hear you now. Yeah.
I went somewhere. I don't know where I went, but it wasn't good. I kind of missed out because I was grabbing a lockbox off a house. I've been listening the whole time, but can you hear me or no?
Yeah, I got you.
So were you guys just talking about whether or not buyer agent compensation people are calling you and asking you if you're paying it or what?
Oh yeah,
okay.
we're getting calls all the time from listing agents saying how much are you going to pay in compensation.
So in Northern Virginia, we actually have a document that we have to have signed by our seller, allowing us to even say that the client is negotiable. So I don't know what level of documentation, you guys are required in the different areas, but I can tell you in Northern Virginia, for me to even say that my seller is negotiable on compensation, they have to agree to pay compensation and allow me to say that they're at minimum negotiable. So it's another document, another layer for us.
We have it in our agreements that they can offer it. And then supposedly the attorney for the association, that's who does our documents, it's the association, unfortunately. But supposedly the attorney has said that if we input a number in that agreement with our seller, that we have to disclose. And because of that, we're putting nothing there. And we're actually leaving it blank. So we're not putting 0, we're leaving it blank. And because we're leaving it blank, it allows us to say, well, we're open to offers. But supposedly if you put a number there, and this is state to state stuff, but in our state, they're like, well, you have to say if there's a number there. It's like, well, there's not a number there. So it's 0. Like, nope, there's no number there. So it's just a way where we're like, yeah, I mean, that's the best for the seller. And I think also the best for the buyer. Okay. There's another court case that we have to get to, believe it or not. And we covered this one a couple of weeks ago. We got an update on it. Court pauses broker's suit over brick-and-mortar office mandate. So this, I think this is in Arkansas, but the article that I read previously about this lawsuit did not say that Arkansas was one of the states that require this. But I feel like it is, because it was a big deal whenever I opened my office, like, where is your office location? And take a picture of the front, make sure your signage is there so that somebody, so where this lawsuit came from is that cloud brokerages were trying to open in various states. They don't have a centralized office. They have a broker that is a broker who's licensed in that area, but may not live in that area, but they're licensed to do all the paperwork and such. And they want to be able to have agents that join their brokerage as a cloud. And some states were like, no. You got to have a brick and mortar office location. And then there have been lawsuits going on around the country where the out-of-state brokers are suing, saying, no. This is discrimination in some type of way. So a lawsuit filed in West Virginia challenging the constitutionality of a requirement that brokers have an in-state brick and mortar office to do business has been paused by a federal court. On Monday, March 17th, Judge Thomas E. Johnston of the U.S. District Court for the Southern District of West Virginia granted a motion of stay to stay a case filed by an online discount broker, Derek Eisenberg, against the West Virginia Real Estate Commission in December. West Virginia filed a motion to dismiss Eisenberg's suit on March 3rd, and Eisenberg planned to respond to that motion on the 17th. Instead, all parties in the case filed the motion to stay on the 14th. Legislation has been introduced in both the West Virginia House and Senate that, if enacted, may resolve the claims asserted in this case. According to the complaint, well, I just told you what the complaint was about. Both sides asked the court to pause through the end of the current West Virginia state legislative session, giving the governor time to sign any resulting legislation. What does the legislation say? What are the rules? All right. Oh man, I'm really hating the pop-ups. Let me scroll down. We've already talked about the complaint. The 14th Amendment protects the right to pursue a lawful calling without arbitrary government interference. That's the constitutionality of the situation. The commission emphasized the mandate was enacted as legitimate state interest, broker accountability. According to the filing, the law requires that licensed brokers, quote, records shall be open to inspection at all times, regular business hours at the broker's place of business. That's what it says in Arkansas too, but recently they have allowed electronic records. So, and you basically, so they would tell us like, here's what we want, and we could just print them for them. The commission also said the in-state office requirement served to ensure broker competence by contributing to, quote, on-the-ground familiarity with West Virginia properties and, quote, local social pressure to conduct themselves professionally and competently. Well, I mean, in this day and age, that's not really a thing anymore. You can have local socialized pressure for online companies as well. Unless more than a few brokers work from their homes, and any hypothetical advantage that ensures to a resident, brokers in this regard is minimal. Okay. Well, I don't know what the legislation is, but I'm betting it's saying, well, as long as they're licensed in the state, they can operate. So we'll see. So West Virginia, there you go. If you have a license there, you can open up a shop maybe if the legislation is passed. And I think they're probably going to pass that legislation because they don't really want to get sued. All right. We have more brokerage news. Real broker Srivatsaa steps down as the real president, opts for a board seat. Industry veteran recognized for his expertise in scaling brokerage operations was named to the position December 2022. The job shift is slated to become official as of June 1st. So if you guys have not met Sharon, awesome dude. He was the president of Real Brokerage, so I have a little bit of inside information here. Basically, he traveled a crap ton, was away from his family, and he's got littles. And so he's stepping away from the role of president. Before him, there was no role of president. It was just tWiRE, who was the CEO, president and CEO, is founder. And so I guess those duties will kind of go back onto him and the rest of the C-level team. But he is still going to be on the board. He's not going to any other real estate company. And it's kind of a move up for him, I guess you could say. And then it goes into kind of the history of what he's done in the past. And he's got some good words. He says at the end, while stepping away from my day-to-day role as president is bittersweet, I'm incredibly confident in the strength of our leadership and the trajectory of our company. Srivatsaa said in a statement, Real has never been stronger in a position to empower agents through its innovative business model, proprietary technology, and collaborative entrepreneurial culture. There you go. I got a lot of DMs on this one. Like, Ray, are you going to cover it? Yeah, I'm going to cover it. There was also a lot of people saying, who's next? Who's going to be the next president? I don't know if they're going to have one. We didn't have one before him. I don't know if we'll have one after him. I guess they're going to probably take their time and find some talent potentially. I also got a lot of recruiting messages from those who shall remain nameless saying, is it time for you to make a switch? Like, no. Elizabeth said Ray for president. I do not think so. No
Ray,
way.
you know what drives me nuts?
What?
Is when I get a call from somebody's secretary trying to set up a meeting with me.
You know, those are so that's not really their secretary. That is the call center that they're paying. Yeah, I don't know if you know this, but they're not actually that big of a dog.
Yeah, and you know, I'm fairly successful at selling real estate. I would think that if you wanted me for your company, then you'd pick up the phone and ask me.
Yeah, it does seem a little bit offensive, but it is a strategy that they're not going after the big. They shouldn't be going after a big fish that way, but that is what they're doing. Elizabeth Nightingale, back on the topic of laws and rules, would it make sense to standardize real estate laws? 50 different states with 50 different sets of laws seems big and crazy to me. I don't think so. I think leaving it at the state's level makes more sense because each state is very, very different in their need. And a California rule or law in the state of Arkansas would be wild. Just like one of our farm rules or laws about land would be absolutely insane in California. So I like that it's a state's issue because it lets them rule like they want, because I'm a big states' rights guy. But some standardization of forms could be useful. That still allows for the differentiation of rules in various states. Some standardization of processes could be really useful. But then again, you have, like row homes may have totally different processes than a multifamily purchase in, I don't know, Baltimore. But, I don't know. I don't know that would be a nightmare undertaking. I dream of the efficiency, but to get there you're talking about hundreds of years probably.
We still have fair housing protections, though, which is important.
That is, yeah, that's a federal thing.
Yeah.
Okay. Since EXP had a lot of fun with, did I say that? Since EXP had a lot of fun with Sharon leaving, asking a bunch of agents is now the time to leave. I just wanted to mention that the EXP announces that their interim chief financial officer is out. Oh no. EXP, is it time to make a move? Your CFO's out. I'm being facetious. The VP of International Finance, Jesse Hill, will lead EXP's World Holdings financial team. Chief Financial Officer Kent Cheng leaves his role in April. He's been there since 2020. All right, so there you go. There's some shakeups for you. I've got one more brokerage thing to cover, and then we'll get some breaking news. How do you like Remax's new logo? I've been trying to cover this for a few weeks. We've just been so busy, we haven't been able to get to it. But Remax launched a new logo, and its reception in the industry can only be rivaled by the Realtor 3D logo that they tried to do. I'm gonna press play on this for commentary. I'm gonna turn off the volume. It's just music, but they go through the history of the Remax logos, and now they have this one. When was that? Wait, what date was that last one? They don't have a date on it. They should have put a date on these timelines. That would have been cool to see what the history was. But here it is. There's the new, where'd it go? There's the new Remax logo. For the audio listeners, it looks like a balloon-shaped Pepsi logo with a blank spot in the middle. Right? Is that pretty close, guys? A balloon-shaped Pepsi logo with a white spot in the middle. It
looks a bit like a pin.
Yeah, like a what do you mean a pin? Like a
map pin.
Oh, okay, yeah. Actually, I think if they would have made it a map pin, it probably would have been better. But it still looks like a hot air balloon to me, but it doesn't have the basket at the bottom. You know what it does look like? Wait, check this out. It looks like this, the Dutch flag. Flag of the Netherlands. Doesn't it look like that? It's basically a balloon-shaped, a hot air balloon-shaped Dutch flag with darker shading on the left side. That's what it is.
And it looks like Pepsi.
It looks like Pepsi. Now, the thing I do like is their new logo words. So if you look at so this is the old logo that showed the RE, and the bottom of the E was cut off, and it had a backslash that was red, and then it said Max with the top of the M cut off. Well, they've removed the backsplash, or the backsplash. They removed the backslash, and they're basically using negative space for it. And I kind of like that look, where now the RE, the E and the M are mashed together, and there's not a line through it, but you still see the cutoff letters. And so your brain kind of fills in RE/Max. I really like that. And supposedly the way they're going to use it in their marketing is by putting things in between it, like houses and people and countries. And I don't love that. I feel like it kind of takes away from the logo mark. But they're really using this bright red, bright blue colors for the brand refresh. So my friends that are at Remax are sighing heavily about this, not willing to go on the record. I asked a couple that own some franchises, and they're like, I'm not saying anything, but I do not want to change my signs to this. And no one's going to know what we are. Everyone knows Remax. If I just put the balloon out there, nobody's going to know what that is. So some have said they should have just taken the word Remax off the balloon for a while and then rode that for several years. And then they would be more open to a more modern shaped balloon without the words Remax in the middle of the balloon. I think that's probably a great take, actually. If you want to change your logo and take your words out, maybe you should continue to use the old logo without words for a while, 5 years or so, and then just modernize the shape a little bit. But they may have jumped a little too far. But I do like the words. I like the words Remax and how it has that slash in there. And maybe they're going to release a font that allows agents to easily do that. I don't know. But there it is. The new Remax logo. Drop in the comments. Do you like this? Do you hate this? Olivier said, or keep the modern shape, but with the word Remax in it. Yeah, they could put the word Remax back in it. And it would make more sense for a little while. Main house values. What's up, Rick? Rick says marketing agencies justifying their existence by changing things that work. I mean, it was a cute logo previously. I don't know why they had to update it. All right, let's jump into some economic news for the week. Prospective homebuyers are getting mortgage ready for spring. Yeah. Loan applications are on the rise as mortgage rates settle into the mid-6 range. Mortgage rates are settling near the mid-6 range, tempting prospective homebuyers who are applying for mortgages to into greater numbers. Mortgage applications to purchase a home, a gauge future home buying activities, rose 7% for the week and were 4% higher than a year ago. The mortgage applications continue to rise as buyers capitalize on lower rates and increased housing inventory, says Jessica Lotz, Deputy Chief Economist at the National Association of Realtors. I know it's economist, but that was a throwback for Dan. The days on market have lengthened, allowing buyers to view homes and submit competitive offers. Inflation has also decreased this week by possibly making it a bit easier to save for a home. What? Inflation decreased? I didn't see that in the news anywhere. Why didn't I see that in the news anywhere? The egg prices are down $2 and energy costs are down. And that's weird that I didn't see that in the news. All right, let's look at this news story. Home prices are rising fast in the Midwest. This was on March 14th. Midwest home prices are up. All right, in Milwaukee, the median home price rose a record 20%. Next came Detroit, 12.5%. Nassau County, New York, 11.7%. San Jose, 11.1%. And Cleveland, 10%. Nationwide, the median home sale price only climbed 3.2%. That's the slowest growth in 6 months. And that is what our next article says here too. Good news for home buyers. It's a friendlier market as sellers get ready for spring. The share of consumers saying that now's a good time to buy was the highest ever over a year. The share of consumers saying that now's a good time to buy was the highest in over a year, but still only at 24%. Meanwhile, the share of those saying it's a good time to sell remains high at 62%. So sellers know it's a good time to sell. Buyers are thinking maybe it's not a good time to buy. I've never seen that even. So on the one hand, this aligns with the data. Realtor.com weekly housing inventory showed that the listing prices softened as new listing activity and inventory growth both rose as homes took longer to sell. At the same time, when the market is shifting and uncertain, it can be wise to hone in. I think they should have said hone in. They said home in. To hone in on seasonal patterns that are fairly predictable. Realtor.com this week released the best time to sell report, which gives homeowners context they need to take advantage of typical seasonal patterns. All things being equal, maybe there is a better time to sell versus a better time to stay. But usually all things are not equal. Usually a seller has to get their home ready. They have to do some improvements. They got to do at least some, paint touch-ups and all that kind of stuff. If you're coming up on one of these suggested times that they say is the quote unquote best time to sell, but your house is not ready for the market, do not list your house. Please do not list your house. If you list your home and your home is not ready, despite the timing, you'll only get more exposure and wind up selling lower. All right. Let's see here. Oops, already talked about that one. NAHB. Housing starts are up in February. Oops, lost my screen share. I am a professional. All right, housing starts are up in February as builders still contend with rising cost. Limited existing inventory helped single family starts post a solid gain on February, but builders are still grappling with elevated construction costs stemming from tariff issues and persistent shortages related to buildable lots and labor. Overall, housing starts increased 11.2% in February, seasonally adjusted annual rate of 1.5 million units, according to a report from the U.S. Department of Housing and Urban Development. The February reading of 1.5 million starts as the number of housing units builders would begin if development kept its pace for the next 12 months. Let's see, multifamily sector, which includes apartment buildings and condos, increased 10.7% to an annualized 393,000 pace. Let's see, despite elevated interest rates and policy uncertainty, ongoing lean levels of single-family existing home inventories helped to boost single-family production in February, said Jing Fu, NAHB Senior Director, Forecasting and Analysis. NAHB forecasts that single-family starts will remain effectively flat in 2025 as prospects of better regulatory business climates are offset by uncertainty on the tariff front. I think every 30 days there's going to be uncertainty on the tariff front because that's the deal. The deal that Trump said is if they secure the borders, we're going to not impose the tariff. If they don't help secure the borders, then we're going to impose the 25% tariff across all goods in Mexico and Canada. And that would include lumber stuff, I think, unless NAHB did get that removed from that portion. But I don't think. I think it's a sweeping tariff. So every 20 days, there's going to be tariff talk. Oh, that sounds like a segment. Tariff talk. All right. I wanted to check out this too. The world's largest 3D printed housing development. This is in Georgetown, Texas, outside of Austin. Lennar and Icon have built the world's largest 3D printed community with 100 homes in the Wolf Ranch development. This isn't some small scale experiment. It's proof that 3D printing is changing the housing industry in real time. And with Lennar investing heavily in 3D printed housing development, their success could spark a firestorm of 3D printed houses across the U.S. Hey, there's talk of tiny homes. Look at that, Christine. I don't know if you're still here. But this is what the houses look like. It's got this. Let me zoom in here. It's kind of got this striations look on the exterior of the home, where you can see the layer that the brick, or not the brick, but the concrete mixture was squirted out in. It's like if you were to take your toothpaste and squirt some toothpaste and then put some more toothpaste on top of that and then put another squirt of toothpaste on top of that, except it remains standing tall. They have metal roofs, and I dislike this flat metal side going over the door. I feel like that could have something cooler there. But the house doesn't look bad. It's supposedly extremely efficient. 100 homes, the goal, 100 homes printed in 2 years, 75% are already sold, 2 and 3 bedroom models starting at just under $400,000. Well, that's in Texas, $400,000 for a 3D printed small regular home. I mean, I guess that feels high. You would think that using something more fast, efficient, and affordable should lower the cost. Here's another picture of some of these. I kind of like them. It's kind of weird not having a smooth wall, though. I think a lot of people may request, like, you know, a sheetrock type look, or to float it at least. But yeah, that line thing is going to run its course. There you go. Expect more 3D printed communities. Tech is shifting buyer expectations, and affordable housing solutions are evolving. Alternative materials would be great. All right, just a couple more articles and then we'll get to some breaking news. U.S. home prices grew 0.4% in February. That's the slowest pace since July. U.S. home prices grew 0.4% from a month earlier. And this is Redfin's home price index. And you can see also where it compares to the Case-Shiller index month over month. So 0.43%. Weekly mortgage demand is pulling back. This article came out today. So we had the article at the end of the week last week saying more people are getting mortgages, and the weekly mortgage demand pulling back as interest rates rise for the first time in 9 weeks. After strong streak of gains, mortgage demand pulled back last week. An increase in mortgage rates as well as rising uncertainty about the economy is likely the culprit. Total mortgage application volume dropped 6.2% from the previous week, according to the Mortgage Bankers Association seasonally adjusted index. Applications to refi fell 13% for the week, but we're still 70% higher than the same week a year ago. Wow. Applications for a mortgage to purchase a home were basically flat, just up 0.1%, but they were 6% higher than the same week a year ago. Mike Frantantoni, the senior vice president and chief economist of the Mortgage Bankers Association, said that purchase application volume inched up to its highest level in 6 weeks, led by 3% increase in FHA purchase applications. Growing inventory. So I guess homes on the bottom 1/3 of the market. Growing inventories of homes on the market and steadier mortgage rates are supporting home buying thus far. Okay. Let's wait. Hang on. Where is it? It's worth the wait. Breaking news from This Week in Real Estate. That's right. We have some breaking news here. Let's go this way so I can get your comments in there too. All right, here we are. Here's what changed in the new Fed statement. It wasn't the rates. This is a comparison of Wednesday's Federal Open Market Committee statement with the one issued by the Fed's previous policy meeting in January. The text removed from the January statement is in red horizontal line through the middle. Text appearing for the first time is red underlined. So uncertainty all around was new text this week or today. And then the economic outlook increased. Let's see, uncertainty all around it's kind of hard to read with all the streakouts. Let's just go to an article that says what happened, because that's weird. All right, here it is. This is better. The Fed holds interest rates steady. Wow, I said it was better, and right when I said it was better, we had this giant ad across the top of the screen that you can't even scroll past. All right, the Fed holds interest rates steady as it tries to figure out the Trump economy. This is on CNN, so if it feels slanted. The elephant in the room, Trump's policies. President Trump's policies remain a big wild card in the Fed because of their potentially wide-ranging effects on the economy. Trump's tariffs threaten higher inflation and weaker growth. His administration aggressively cracking down on immigration could cause labor shortages. I don't think the gangbangers were working that much in construction, but that's just me. His massive layoffs for federal workers could send some local economies into recession, but his deregulation efforts and the extension of the 2017 tax cuts could promote growth. Putting together, it's unclear what the net effect will be. So basically, the Fed's like, we don't know. We don't know what's going to happen. Fed officials see economy growing much more slowly versus before Trump took office. Perhaps the biggest news from the Federal Reserve's March monetary policy meeting is that officials believe the economy is on track to grow at a slower pace compared with before Trump. It's interesting. Whenever you look at the whole tariff argument, a lot of people are saying these tariffs are basically a tax on the poor because they're going to be buying the stuff. And because they're buying the stuff, they can't afford the stuff if you place the 25% tariff and make the stuff more expensive. But really, it is kind of like a consumption tax. It is only going to tax those people that buy stuff. And who buys the most stuff? Well, that's rich people. So if you believed that a tariff was a tax, then you have to believe that a tariff is a tax on those who consume the most, and those who consume the most are the rich. I don't believe that a tariff is a tax because of something really interesting that's happening. As the tariffs increase on China, Walmart calls China and says, y'all got to do something with these prices because of the tariffs. We're not going to pass this on to consumers. Y'all got to do something here. And if you don't do something here, we're going to find other. So you have these businesses now negotiating prices and putting the tariffs back on the countries. Then then people are like, well, Costco's not doing it. Yeah, Costco is now doing that as well. So that is the intended impact, is that to play ball in our economy, which every economy wants to, you got to pay to get in. And it's the same thing that Amazon did with their store. It's the same thing that Apple did with the App Store. It's the same thing, all the major, if you create a market and people want to enter that market, you charge them to enter the market. Instead, what's been happening in the past is that when we wanted to sell outside of the market, we were getting charged. And it was crazy. Just look up the Marshall Plan. That stuff kind of needs to end. I think most of those countries have developed now, and Europe's good. We should have, if they put 25 on us, we put 25 on them. Reciprocal tariffs is just as good as free trade, in my opinion. So we'll see what happens. But I think the tax cuts, and I feel like the economy as it grows back will be a little more solid. It's natural. Any stock guy out there that was like, oh, the stock market tanked, who saw this coming? If you didn't see this coming, you need a new stock guy. Because we were making moves in November based on exactly what has happened in the last 2-3 weeks. Anytime you have a change of president, there's going to be a transition into what is promoted and what's not promoted economically. And so the things that money is moving to, you basically move money out of the things that will no longer be supported like they once were. And so it kind of levels the playing field over there, while other stuff is going to be supported and promoted. And then you have more money flowing in those areas. So we'll see what happens. But I think this is just a natural time of transition. And during these times, it's a wonderful time to buy, which is also what I'm doing. I can't give you stock advice, but man, there's some stuff on sale out there that has great fundamentals. So why not? All right. So it's not going to lower the rates. If there's a recession, which people are talking about, this is going to be a recession. I haven't heard the R word since Trump was in office last time. Isn't that weird? That's so weird. How they totally stopped talking about it, even though the economy was worse off. So if there is a recession, what happens with rates? Any guesses? Drop in the comments. I'm giving you some time. If there's a recession or fears of a recession, what happens with rates? The answer is the Fed usually lowers the rates. So if there is recessionary concerns, if the Fed's comments match their actions today, then you would think they would lower the rates. But it appears that they don't think we will be in a recession, that the economy will remain strong, because they started cutting rates before Trump took office, stating, well, the economy is really strong, so that's why we can cut rates. But if it's a recession, the Fed will lower rates. I think the reality of it is our economy is strong. Everyone knows the economy is strong. And if you continue to lower rates, you will cause issues with inflation, because there will be more orders for stuff, because more people will have money to expand. And if there's a bunch of money to expand and stuff's already expensive, more people do more orders, and then the price on stuff goes up. That's just what happens. This is not a mystery. It's just money. And that's exactly what happens every time. So I think that's why the Fed did not lower the rates. I also know the Fed is not a huge fan of Trump, which is why our thumbnail goes super hard. I'm going to put this thumbnail up. I created the thumbnail. I'm proud of the thumbnail. Here's our thumbnail. It says Fed up. The Fed is definitely fed up with Trump. He doesn't like Trump. And so I think he will put things in his remarks to impact how people view Trump and not necessarily the actions that he's taken around the economy. So we'll see what happens. I think we're in a pretty good situation, and that's why I didn't lower the rates. I'm not super fearful of it, and the rates have been adjusting on their own. So everything looks pretty strong. That's all I got today. Drop in the comments. Do you agree or disagree? Are we headed for a crash, or is this exactly what the oligarchy has planned? Olivier said, the tariff 30 days is your smoke up your behind. Okay. Olivier. Let's see. Olivia said, I bet with wind ratings pretty good. That would be interesting hurricane prone areas. What? I missed a comment. Sorry. All right, guys. Well, thanks for joining me today. Thanks for all the feedback in the comments, live in the chat. Drop your opinions in the chat if you're watching the replay. And if you want to, you can tag a time too. That way we can catch up with what you're talking about. And I'll see you guys next week.